nice. I was just looking at doing a session on Bitmex. So for some reason I have some ugly colors, but yeah. Another message, even I'm in Norway, I'm getting this message. I don't know why. Let's see. The Bitcoin is something it's trying to achieve here. Yeah. You can look at it now and then. So yeah, this is a super small demo account. I did play the more or less the same setup as I did in my main account. That one worked out decently. Okay. So in Bitmex, you can deposit BTC. When you deposit BTC, it's called XBT Bitmex. So have the charts, and yeah, you're always sitting in BTC as the margin. So not as in Binance, where you can sit in USDT. You're sitting in BTC as margin. So one contract is in this pair the same as $1. So if you are buying 10,000 contracts at 10k, and let's see, I can't manage the leverage, but if I were at, okay, I can do this contract, I guess. So 10,000. So if you're buying 10,000 contracts, the 10k, the cost to open the trade is more or less 1 BTC. So that's the way it's working. So if you're buying 20k contracts, it's 2 BTC. You will normally not trade in Bitmex at the 1x leverage. Yeah, I will show post only. Yeah. So you will usually not trade at 1x leverage in Bitmex. What you will do to spend less margin is to use leverage. So let's say I'm changing the leverage to 10x. You see, and I can show it at 10k. So now the cost to open a trade is 0.1 BTC. So it's reduced by a factor of 10. And I can change it to 100. It's more or less changed to a factor of 100. So this seems like a very good deal, and it kind of is, but you need to know what's the impact of doing this. So I can show you. Let's see, I need to scroll a little bit. I'll move this down. Yes, I can. Move that quickly message. Okay, so this is a calculator you can use to show your ROE or profits for a simulated trade, and show your liquidation price and so. I will explain that quickly. So if you're doing 10k at 10k contracts, and the exit price is, so say this is a winning trade. So your exit price is 11k. So the leverage is 10. So the required margin is 0.1. If you change the leverage to 20, the required margin will be half of that. So it basically you divide the the one BTC, the full 1x leverage margin by 20. But there are some, let's call it drawbacks. When you change the margin by changing the leverage, you're also changing the liquidation price. So for a, let's see, it's short and it's isolated, it's long. Okay, so for liquidation price, this doesn't matter. So in the enterprise, it's 10K. If you're buying doing a long at 10K over here, and you're using 10x leverage, your liquidation price is 91.20, and that means that if you are not using a stop loss and you're doing a 10x leverage long, Bitmex will close your position when it reaches 91.20, and you will lose the margin you spent for the trade. So you will lose this amount as a liquidation. And if you want to use higher leverage, something like 20, let's say 50, see that the liquidation price is now much closer. It was 10x, 91.20, and at 50x is 98.38. So 162 points, and you get liquidated, and you lose 50x. You lose this amount of your account when you're liquidated. So I usually call leverage is margin management, and position size is risk management. That's because, let me show you. If you're doing a long 11K, just set it back to 10x, and your exit is 11K, so you're closing your position at 11K. Your profits will be 0.1-ish BTC. If I change the leverage to 20, the profit is the same. 50, it's the same. 1, it's the same. So the leverage will not impact the actual profits. And I can show that one. Taking this already open position, and you see 460%, 0.0244 XPT in profit. If I set this to 100x, the ROE percentage is increased, but not the actual profits. So it will not impact the actual profits. Some people think that if you're doing 100x leverage, you're making 100x more in the trade, but it's not the way it's working. Only the position size will matter for the risk. And also remember, the position size is what's impacting how much you lose also. So of course, if you get liquidated with an isolated position, then you will only lose the margin you spent for a trade. Let's see, I think I had like 8 days. I think this one is showing why you shouldn't use liquidation as stop loss. At least if you go to my YouTube, this one will have a video about why you shouldn't use a liquidation as a stop loss. Because when you are liquidated, you also lose a little bit more than if you had a stop loss at the same location. So just keep that in mind. Okay, so when you're trading with leverage, as I said, only the position size matters for the actual profits on the trade. So is it dangerous to use high leverage? It's not really dangerous to use high leverage, but the problem is most people that are inexperienced traders and just stupid. They use high leverage to be able to do bigger positions, because let's just go back here. So this is a small account. It's available 0.04-ish. So with this 10x leverage, let's see. If I'm going to go long, 600. So how big of a position can I do? This one costs 0.08, so let's say 4K maybe. Yeah, I can pretty much do this one. Let's see. Yeah, I can do this one, 4K. But if you see here, if I change the leverage to 100, that's no problem at all. Oh, I can do this with no problem. Oh, I could almost do 30, 40K contracts. The problem with this one is that if this one is ticked, I lose the entire account. Let me just show the example for a 40K position. How much would you lose? So let's say you enter at this is the quantity. Let's say 30K. Enter at 11,600, and you exit at 11,550 as a stop loss. 10. So yeah, that was very quick. So I can use something like 450 maybe. Okay, on this trade, if this one is stopped, you will use the entire account. So just because I was able to do this trade at 100x leverage, yeah, this one will actually get liquidated before this, but still. So I used the biggest order I was able to do for the account, and the trade is allowed, but the position size is way too big. It's way too risky. I have a calculator. I can show this one. Let's see. I think it's Ctrl 4. Okay, I can use this one, I guess. Oh, I can use the other one. Let's see. Just show quickly. Yeah. So let's say my account is 0.1 BTC. I'll just show some examples. And I want to risk 2%. So whatever leverage, 25. 11,600, 11,450. This one shows me that the correct position size for 2% risk is 1,771. Yeah, 71. So this is the correct position size for correct risk. But I was able to do 30, 40K contracts. That doesn't mean I should do it. But most people do this. They go to Bitmex to be able to do insane positions, and they lose all their money, because that's what people do. People are stupid. Okay, enough about this. How do you use Bitmex? So let's do some more proper position size. Let's see there. Let's say I want to go long from 11.6. I can do a limit order with second price. Okay. Set normal. Like, yeah, 10x is quite normal. I usually use more, but as long as the stop loss is before liquidation, the leverage doesn't really matter, because the profits is the same and the loss is the same. So let's say I want a long 11,600. I should actually do a stop loss first, but in this case, let's do a limit. So I'm going long 2K contracts. I click on buy. I can show these checkboxes later, but let's first yeah, I can explain. So in Bitmex, you're getting paid by doing limit orders. You are a maker, You get a small, you get paid a little bit by doing having resting orders in the books. If you click on post only, you can ensure that you are not getting insta-filled, and then you will pay a taker fee. So let's say you're trying to enter super close to the current price, and you don't want to get filled as a taker and pay the fee. You can click on post only. That will ensure that if the price dips below your order just as you enter it, it will just ignore it, just cancel it. I don't need it now. Do long. This will enter an order in the order book. If this one is filled, I will get paid a little bit, so maker fee, maker rebate. And the important part now, I need to do a stop loss for this one. And still the 2K contracts, but I need to choose this one. This checkbox will ensure that when the stop loss is triggered, it will only close a position. It will not flip it to a short. I can show an example of that. If I place my stop loss at 11,500 and click on set as sell stop, because when price goes below here, I don't want to buy more, I want to sell. So this is a market order. So when price reaches 11.5, Bitmex will just do a market sell of the position to close it. So I can do this, sell, place. Now there is a stop loss here. This will close my position before it's getting liquidated. And the loss is the one I calculated from fill here and I'll stop here. Okay, I can just show it quickly. Okay, again. So for this example, 2,000 contracts, 11.6 and 500. Leverage doesn't matter, but I can just change it. So the loss will be 0.015. So how much is that of the account? So the account is 0.07 something. Yeah. So it's more or less just 2% or something. Yeah. So this one will try to fill here if price goes here, and if it dips below here, it will close the position. You can also use this is just looking at the last price. You also have some index price. That's the price of some order exchanges. And this is some calculation from that Mark. So what Mark is doing is that if you have a big wick, a fat finger, this one will the mark price will not go to that. Maybe not stop you out. So if I do this one, it's not looking at the price in Bitmex. It's looking at a calculation from the other exchanges it's looking for the prices on. That can protect against some fat fingers. But keep in mind, if we are actually dumping, it will it can delay the stop loss, so we can lose more money. So it's a thing you need to take into account. Okay, if I'm not choosing close and trigger, that's a different story, because with close and trigger, I could set a stop loss of something like this. It will still just close my position. But let's say I did 5K contracts on the stop loss, didn't choose close and trigger. Well, what this will do, first it will fill my long. If price goes further down, it will actually flip my position. It will first close the 2K, but the remaining 3K will be a market sell. So it will be a short actually. So usually you don't want that. Some people do this for breakout trading, but yeah, just remember to click this one. and remember to use a big enough stop loss. I've gotten licked 2 times, and one of the times I got licked for one contract, because I did a error in my calculation of the stop loss size. And one time I forgot I had a fat finger order and it filled it. So yeah, I ended up in the aggregator for those knowing what this is as a lick. So that was something. But on that big move, I actually made more money still than the lick. So yeah, whatever. I had a short. Okay, so that's the stop loss. You can also do a stop limit. Let's do a stop limit. So what that will do, the stop price is still the trigger. So when price reaches 11.5, it will do a limit order. So let's say that you want to try to get filled as a maker. I don't recommend this one. You could do some yeah, like just like this. So if price wicks down to this to 11.5, and then this is a limit sell in the books. If price goes below and up again to fill the order, and you will get filled as a maker and don't pay the fee. The problem is, if price is moving fast down and never retrace up to your order, it will get skipped. This is usually when people say the stop loss doesn't work in Bitmex. They are using the wrong order type and don't understand the limit, stop limit, because it will the only thing this will do is will wait for the trigger price, the stop price, to be reached. Then it will enter a limit order cell at the area you choose. So you can also do this, use this for other stuff than stop losses. So you still want to do close on trigger. So let's say I want to use this as a stop loss. I could do something like 11,400 sell. Oh, I have custom triggers, so the size doesn't matter. Sell. So this is now a stop limit. What this will do, it will wait for the price to reach 11.5, and it will enter limit order at 11.4. But in most cases, you won't save any fees on this one, because let's just show an example maybe. Okay, so if you do a market order at the current price, it will just mark it in here. If you do a limit order sell at something up here, it will be a resting order in the books. But if you do a limit order below current price, it will just be a market order, because it will get insta filled, because price is already above it. So, and the same will happen here usually. You trigger it at 11.5, and the order will be placed here at 11.4. But as long as price is above this 11.4, it will just act as a market order. Yeah. You can use this as a protection sometimes if you're doing super extreme knife catch trade, because sometimes you might have huge slippage on market stops, and then you could do a stop limit at the price, and you could put the stop limit price just above your lick. So in worst case, the stop will not work and you get licked, but you still have a defined amount you will lose, the margin of the trade. So yeah, my lick was 0.4. My lick on this trade it was in the good old before the 6K dump. So I think it was 150k or something. Yeah, something like that. It was a 100x trade, so yeah. And yeah, stop loss. Let's see. Okay. Yeah, you could use a stop limit to protect against extreme slippage, because sometimes if you have a stop market order, if the stop order is actually already executed but not filled yet, it could in some rare cases actually fill below your lick, and you can lose more than your margin. So this is extremely rare, so just use a stop market. That's the smartest thing to do normally. Okay, so this is an example. Let's just do one more. Let's do a stop market again. 2k. So here's a trick for you, if you understand the stop limits. So as I said, when you get to the okay, one more. You have reduce only orders. I need to explain that first. So reduce only orders are used for profit targets. So this position is not filled yet. I want the long 11.6. So let's say I'm gonna do a 200 contracts profit target here at 12.3 something. Let's just do 12.300. And I click reduce only and sell. I want a profit target, but I'm not allowed. That's because I reduce only order. This one will only take profits on positions. It cannot create new positions. If I did remove this one, I click sell now to actually market it in. So, but I reduce only will only take profits. And if I was already in a position, like I could use this and set a sell above. But I can use stop limits. My tool is actually using stop limits to trigger profit targets. So my stop price, that's the price to execute the order. So I need to already be in a position. I already showed that. So I need to put my stop limit one tick below the entry. So my stop need to be 11,600 and then one less. That's because I need to be filled first. I don't want to have it trigger before my position is filled. And then my profit target price is 12.3. So fair. And it's a reduce only. And in this case, it's a stop, so it's close on trigger, but that's the same as reduce only. So I can click here, sell. Now there's a stop order here, but this one will not close my position at this point. This one will wait price to go to 11,599.50. Then it would do more or less this. Well, it will trigger at 12.3 profit target, 200 contracts, reduce only. Post only. You don't need to do post only unless you want to prevent getting insta-filled. So let me show an example of post only. So let's see, I'm in the correct way. Okay, yeah. So this one will wait for our profit target getting triggered. I can actually do another one as long as the total position, the total profit target is less than the total position I'm in. I can do more. I can do one at 14k, at 200, same stuff. So this would now get first filled position at 11.6. Then it will trigger two profit targets, one at 12.3 and one at 14k. If I just get stopped, these orders will just get cancelled because they are reduce only. So yeah. Okay, let's cancel this, and this. For a short, it's working just the same, just inverse it. So you're selling here and you're setting a buy stop above. It's working exact same way. Okay, so post only. I can just demonstrate it actually. So let's say I want to do a limit order. And I want to do it at current price 13. I could do it a little bit below, I guess. 13K, or maybe even lower. So I need to uncheck reduce only because I'm not in a position. So a post only order. Let's just put it. Post only, normal, not post only, also worked. But if I do a post only order above current price, it will not work because this one will get insta-filled. But if you choose to not use post only, you can buy. Oh, this one will actually get licked. I need to use a lower price. It won't get licked because I would get filled at current price, but it's a warning. 13. Oh, 25. Buy. So I actually created a new position because it wasn't post only. So if I wanted to ensure not to open a new position, buy the order instantly and pay the fee, you click on post only, because that will guarantee that it will first go into the books and then wait for a fill. This is more or less the same as a market order, so I could just do this and click on buy. It will do the same. I can close it. I did the correct one, yeah, okay. Yeah, stop market limit. So, as I showed earlier, the leverage will only impact the liquidation price and the cost of the trade. So, once again, if I do 1,000 contracts, that's 500. Scroll down. Oh, come on. There. The cost of the trade is here, 0.003. I do 100x leverage. The cost is reduced, but in the same time, the liquidation price is now very close, like here. So you need to have a stop loss anyways. But if you actually have a stop loss, people are saying that higher leverage is risky and stuff. If you know what you're doing and actually have a stop loss, not too close to your liquidation price, the leverage isn't the dangerous thing. It's the position size. That's the one that will determine your loss. Okay. What else? So, if you want a quick rule on how to calculate your risk within Bitmex, let's say that you go here, and your account is 0. Let's just do 0.1 to do an example. Your account is 0.1 BTC. So the margin, you just need to make sure you have enough margin available for trade. And the loss on the trade, so you can just say, okay, I want to go long at 11.6. I want to stop loss at 11.3. How much can I lose? Okay, I want to risk 1%. So that's 0.1 was your margin. And then you add divide that by 100 to do 1% risk. So this one is too high. It's 4.5 times too high. So I need to reduce my position size. Let's do 400. Now it's more or less 1% risk. Maybe I could do 420 for adults, or yeah. So this is the proper risk. And you see, whatever leverage I use, I lose the same. So only the position size will determine the loss. And as long as this one will impact the margin. For as long as my stop loss is before the liquidation price, this is the only thing that matters. And you can use the higher leverage just to make sure that you spend as little margin as possible. So you have free margin to trade other stuff. So leverage is more for margin management, but new traders usually abuse leverage. So this is the proper risk, but this looks so much cooler. They ignore the extra price because they don't care. They get licked anyway. So, but let's say 11.5. And how big a position can I do? Okay, 0.1. Oh, 50,000. Oh, I could do even more. Oh, I could do 100k. I'm so cool. Okay, 0.1 BTC. Okay, this one is a good trade. Yeah, 100k. So make a liquidation price for 11.6 at the 100x leverage. The price 11,600. 100x leverage. Okay, so the liquidation price was 11,525, and at that point they will lose the entire account, all the 100k here. But as you see, the amount does not impact the liquidation price. So this is what people do, and this is why people get wrecked, because they don't know risk. Okay, so there are some things you cannot do in Bitmex, and that's why I have some helper tools and stuff. So most of the people in this channel, at least people been around us a while, and in the other channel, trade price action. So let's say we want to wait for, let's say we want to short, and if price goes down here or something, maybe even below here, then we want to ladder in a position, let's say the previous highs, 12.5. But you cannot do that. You cannot set sell orders below current price. That would just get insta-filled. And we cannot set use stop limits either, because if you set a stop limit to trigger, we cannot trigger buys. No, so sorry. We need the direction is wrong. We cannot set these orders the correct way, because we could trigger the sell. That's okay. We could set the trigger price for 11.2 and set the seller here. The problem is that you cannot set the stop loss for this position. So I could do something like stop limit. I want to short 40,000 contracts. The trigger price for this order we have 11.2. I want to sell at 12.4. So it's possible to trigger this. It would work. It would wait for to get the trigger down here, and it will set a sell in this range. The problem is you cannot trigger the stop loss for this one, so it's super risky. What you can do, you can use my tool. Let's see. Got hang on my. Is it still okay? Let's see. Yeah, okay. My stream was lagging a bit. Okay, so what I can do in my tool, so I can actually only use this for ladder orders at the moment. I will add it later for the other stuff. Okay, I don't want to change this one. So I'm trading this pair, the main pair. I want to do 25x leverage. I will get helper to help me with the size layer. I want to use 1% risk. So, and my ladder should be 12.3 to 12.5. Stop loss 12.550. I want to do 5 orders in a ladder. This will put in orders from in between here. One at 12.3 and the last one at 12.5, and the 5 orders, 3 orders in between. And I want the position size, the order size, sorry, to be 20% incremented. So the first order will be smallest, the next one bigger, and the 12.5 will be the biggest. Every order will be 20% bigger than the previous. I can set how much I want to take profits at different ROEs. I can also just enter the correct price for the profit targets. You don't need to do this, I can just skip it by now. But the important thing is, we were looking to enter this position if we got let's say we got an hourly close below 11,200. I can click on sell, just to see current price. Okay, it's correct. Let's just do another pair so I don't impact my trade. Let's do this one. You can use December. Click on sell. So this one is calculating the correct position size based on 2% risk, I think it was, 1% risk. So this is the correct position size, 1% risk. It will show me how much I will lose. It will show me the average price for the ladder if all orders are filled. This is the average entry. And I can just execute this one now. So this one will not send the orders to Bitmex, because I already said you can't do that. You cannot trigger the stop loss before we get down there. You could trigger the entry, but not the stop loss. But this one will do. This tool has a helper process running in the background, and this one will wait for the 1 hour candle to close below 11.2, and then it will send this setup to the exchange, and then it's valid because then we are already down below the entries. So then I can send the short orders and the stop loss at the same time. So then it will work. And it will also show me the leverage I can use. So I could execute this one at 60x leverage and just click on sell. And it will just send it to the tool, and it will monitor the price and wait for a 1 hour candle below 11.2. So that's perfect if you are trading price action. Yeah, so if you want to wait, let's say the 12.3 now we cannot sort, but let's say we go to 11.6, that's still a valid place to bounce and go higher. But yeah, your computer needs for this one, the stuff that is requiring monitoring. You need to have a computer running all the time, or you can get a VPS or something, an external server. But most of the other stuff doesn't require it because it's only sending the orders to Bitmex. So it's everything is in Bitmex. It's using these stop limits to trigger usually. So everything is sent to Bitmex, and you can shut down the computer. But for this one to work, you need to have the tool running to trigger the order at the correct time. And here you could recalculate. Let's say I want to do 2%. And it will now show the new size, and you can trigger it. Okay, back to my page. Here you could close the position. You have some trade setups, which will do more or less the same as the ladder order. I might integrate this at some point, I don't know. And you could do some risk calculation. This one is quite useful, actually. Calculate average entry. So this is the current position. Let's say I want to add 2K contracts at 11,600. The new position size is 3,400, and this is the new average entry. So you might want to move your stop loss above this one if you are adding to a position. Yeah, because your existing position per entry of 10.5, but you have added to it. So now you need to move your stop loss to fit the new average entry price. Yeah, so this is useful for knowing to what price you need to move the stop loss if you're adding to it, adding to a position. Stop limits. Let's see, agile cheat thing here. Okay, I think that's so by shorting, I can just do an example for short too, just to show it. So for a short, let's say I need to do the same risk calculation. So let's say I want to do a short at 39. I should just stop loss first. Let's set that at 14k and close on trigger because I want to reduce the position. This is on stop orders. You are allowed to do a reduce only order before getting filled. You're not able to do that on limit orders. So set buy stop. Why is it the buy? It's because if I'm trying to short, I'm selling, but and the higher the price is going, the more I will lose. So I'll sell to close a short and actually need to buy. And that's why you see when price is going higher and people are starting to get liquidated, price will actually accelerate up. So then I want to short. Oops, that was a little bit high. Maybe later. 4k, 39. That one is below the stop loss for short, so that's okay. There, the orders in the books. So this is a short. So what's the risk for this one? Let's just calculate that. And the calculator is of course up here again, because why not? So it's 4,000. That's the liquidation price. Sorry, 4,000 plus 4,000. That's 4,000. Is entry is 13,009, and the stop loss is the exit stop loss is 14k. And here I will use 0.020 BTC if this one is triggered. So let's if I had an account of 0.1 BTC, this will be 2% risk because 0.01 will be 1% risk. And as you see, as earlier, loss is not impacted by the leverage. So what is the maximum? So what's the maximum leverage I can use? When I'm not using my tool, I need to check here. After a while, you can kind of learn this some more or less, but enterprise is 13.9. So I cannot, okay, this is a short. So I cannot use 100x leverage because the liquidation is before my stop loss. But I could use something like 80. That's still quite high, but so now if price is going higher and I'm getting to my stop loss, this will trigger. My liquidation price is still above my stop loss, so that's okay. I think this is a little bit too tight, maybe. I could get licked before it's triggered. So let's say you can use something like this. And let's now go back. Leverage 70x. 70. So you see the margin requirement for this trade is super small. But the loss is still the same. So, but I'm reserving some or keeping more leverage to use for order trades at the same time. And there's one more thing, one more trick here with leverage. If you're already in a position, I've already calculated this one, that my average entry will be, I think, something down here, even with these ads. So now I'm using a 10x leverage on this one. But my stop loss is before liquidation on this one, because my average entry is here. So my liquidation for this, even getting filled, will be down here somewhere. So I could actually, at a high leverage, I can actually change this trade to rates this way. So let's see the available balance here. Let's change the leverage down again. 10x, available balance, 25. So by changing the leverage, I'm actually getting back some of the available balance from this. So if I'm in a profitable position already with a stop loss above my entry, or if it's a long, I can actually just free up some margin by just changing the leverage to 100x. And this is not risky because as long as my stop loss is at the correct place, I'm not risking to lose anything more with high leverage. Just keep in mind, if you have more resting setups lower, that these ones might not live. They might get licked. It could trigger this one, then fill another position further down. But this position might not have a stop loss close enough. So even though this position is able to cope with the 100x leverage, resting orders below and other positions might not. So don't forget about that one. I have done that one, almost got licked once by accident. Okay. What else are you wondering about for Bitmex? So Binance is more or less the same, but I was thinking of doing a session for that one later, another day. Okay, in Bitmex, you have more contracts than Bitcoin. So this is the perpetual contract. This one will never expire, and in this one, you actually pay off. You can pay something called funding when you're trading. You see here, next funding is there. If this number is negative, you are paid to have a long position open. But and this is every 8 hours you pay 0.01% with this predicted funding. And for such a small position, that's not much. But that's one of the drawbacks by using a perpetual contract, because you can end up paying some funding. If you're doing the futures, you will not pay funding. The problem with this is that these contracts will expire. This one will expire in December, and this one in March. And then before that, you have to close your position. If not, it will be closed for you. And one more of these drawbacks is these ones have lower liquidity, and the price will also have an offset for the other ones, and this offset can change. So sometimes now it's $150 above the spot and perpetual price, but sometimes that one can change. It could be higher and it could also be lower. So your entry might not be as good in the future, even if Bitcoin norm actually went up. And this will expire, but here you are not paying any funding, so it's good for positions when funding is extreme in the perpetual contracts. You can trade Cardano. You have a future with in USD price. So I have BTC pair. So this is the price for Cardano in Bitcoin pair. We trade this the normal way. You enter at 8.13 and stop loss at 8.11 and so on. You can use the calculator to calculate your risk also use my tool. And here you're trading in dollars, but it's not actually dollars. Let's see, ADA, I think every virtual, or what I can say, dollar here is actually 0.001 or something XBT. So the value here is not it's not $1. It's a different calculation. Okay, so just keep in mind that 10k position size in something like ETH is not the same as a 10k position size in Bitcoin. It's actually much bigger, really. Okay, well, there. I don't like this stupid banner. So you have multiple pairs, and I saw that they actually announced they're adding some new. Yeah, now you could soon short BNB in Bitmex. So I know a lot of people want to short BNB and DOT and UFI. Yeah, they want to pump it to 40k maybe and short it. We'll see. Anything else you are wondering about in Bitmex? I probably forgot a lot of stuff, but inverse, let's see. So the inverse part is that you're sitting in Bitcoin, but you're trading in USD equivalent. Let's see, changing the leverage will not impact the profits and losses I've covered. I covered stop limits, risk calculation, more or less. Yeah, slippage, I can, no slippage. So I was mentioning it a little bit earlier about with stop limits and stop markets. So when you're doing a market stop, let's say you have a stop loss below here for a long. Yeah, let's see, could maybe try to move it a little bit more. I don't think it will. Okay, maybe. Yeah, okay. A bit ugly, but still. So let's say you have a stop loss just below the previous lows here. What can happen is that a lot of people have their stop losses below here, and if I'm having a stop loss after a lot of other people, there might not be enough buys in this area to have enough liquidity to fill all these stop orders. So price might wick down quite fast, more like a vacuum. So not most likely there are not many. Okay, maybe at 12.5 there is, but there might not be too many resting orders in this area. So if a lot of people have stop losses in this area, price might wick fast $200 down or something, and there it will fill my stop order, even if it was triggered up here, and that's slippage. Could maybe look at it at the same as what's the word? Spread. But so if you risk 1% for a $10 stop loss up here, and you get $100 slippage, you can lose 10%. So just keep in mind that if you're doing a tight stop loss and you're calculating your risk based on that, you need to know that you could have slippage. So be careful with the placement of your stop losses. That's actually one of the cases where high leverage could save you. If you're doing a 100x long, it might actually in such cases be better to get licked than getting a 200 point slippage. But this is quite rare, And usually you will lose much more money by getting licked all the time than using a stop loss. So I would recommend people not being very experienced to always use a stock market. It will most definitely be better long term for most people. Let's see, I had a video. This is why you shouldn't use. Okay, this is my personal video. So this is a video. Okay, you can remember this stuff going on. They're showing why you shouldn't use liquidation and stop loss. So this one should be useful for quite a few people. Okay, so a lot of people are getting licked in Bitmex. Usually the highest amount you could lose is your position cost, your margin. But sometimes there are just not enough liquidity in the books to close the position. And then what's happened when you are getting licked? People need to, so Bitmex need to close these orders anyways, even if there's not enough liquidity in the books. So they could do two things: just let the orders get filled and create a wick, or they can try to close it a little bit over time. That could work out some yeah, I can explain close. That could work out sometimes, but if Bitmex is not able to close the positions fast enough, the position could actually lose more money than your margin. But that's not your problem anymore. That's Bitmex's problem then. And the extra loss more than your margin for trade is actually covered by something called an insurance fund. So there's a big fund, I think it's something like 40k BTC or something now, that will cover your losses. So they will take the hit if too many people get licked. I also have a video about that one explaining it in more detail, so you could check out my YouTube for that one. That's actually this command, I think, this liquidation command. Liquidation. This one. Okay. You have two modes of the impositions in Bitmex. You have all these 100x and 1x and 2x and 3x and so. These are isolated positions, and these are the ones I've explained with the maximum loss is your margin and so. You also have cross. So let's see now. My liquidation price at the moment is 10,182. Let's change my leverage to 100. My liquidation price is 10,487. But let's move my position leverage to cross. My liquidation price is 7,891. So this seems nice. What's the problem with this one? The problem is this will not have a maximum loss of the margin for trade. It will use my entire account as margin, and that's why for this one you could be way underwater and still not get licked. But at the moment you get licked, your loss would actually be your entire account. So let's first move it away from cross. So let's just calculate this one. So my liquid price was more or less 8k liquidation price. So my entry is now, yeah, it will be a little bit higher later because of my orders, but let's just say my average entry is 11k. And my leverage is cross. Then leverage went away, and all it's caring about is my total wallet balance. So my wallet is 0.75, something like this. Okay, this wasn't correct because of my, okay, whatever. Yeah, it's because of the entry price. So my liquidation price is 6,592, but it was something like 7,9. Let's put that one in here. So my current position would be, let's see, just ignore these orders, and let's say I only have this one, so it's 1,400. My entry price is 10,552. My exit price is 8K. So what will be my loss? My loss on this one, oh, okay, I did use the other one, okay. So my loss on this one will be 0.04 PT. If I did the ads too, I would lose, okay, I would use more than my, yeah, whatever. So if I did this position in cross, will not get licked before below 8K, but I would lose my entire account. So, and then you can say, oh yeah, but I have a stop loss, so it's no problem. But there is one problem with cross that most people don't know about. I don't know if people remember I think it was August 2018. There was some maintenance in Bitmex, and after this maintenance, some of the coins wicked like crazy. XRP wicked from 5K satoshis to 20K, and if you had a position size calculated with 1% risk or something, with 100 satoshi stop loss, you wicked to 20K, and many people got licked on this one. They got filled, licked at the top, more or less. And if you had an isolated position, you wouldn't lose more, or you could if you have a stop, actually, but usually you don't. And many people got their entire accounts licked on these moves, because multiple pairs did stuff like this, and also Bitcoin did a nice pump, because Bitmex was close to maintenance, and then they pumped it in other exchanges at the same time. So just don't use cross. And there's one more thing. For an isolated position, if you have a long from 11.6 and you stop at 11.5 something, if something goes wrong with your stop, or maybe you cancel it by mistake or something happens, with the isolated position, this one will get licked, that's okay. But your leverage on stuff is done in a way that your lick will be just below your stop loss somewhere. But if you have cross, this one will just continue and continue and continue to run against you, and in the end you might lick your entire account. So that's also a risk by doing cross. And people are saying that, yeah, but cross is so much easier to manage and all that. But it's not necessary to use cross to manage your position. You could just use the leverage needed. So maybe you need 50x then for your stop loss to be in a correct place compared to your lick. But use 50x then. Your loss will be the same for cross and for yeah. So just use the correct leverage. Don't use cross. They are saying that the experienced user can use cross, but you don't need to use cross, and there are drawbacks with it. You are risking more. What if your internet is disconnecting just when you're changing your orders? So yeah, use isolated leverage. And the Bitmex tool and this one will actually show you the maximum leverage you can use. So if you're entering a position like this, you can use the highest leverage possible, and if the stop loss doesn't work, this will make you lose as little as possible if you're getting licked, if the stop loss doesn't work. Because the higher the leverage you're using, the you have less margin spent. So I wouldn't recommend new users to always use high leverage, but that's not because it's more dangerous by itself. It's because they are using the high leverage to do too big positions because they don't understand risk. That's the real reason. And some people are saying that new traders should only do 3% leverage and stuff. And I understand what they are trying to achieve with this, but if you are doing, oh damn, calculator up here again. So, okay, it was there. So these 2K contracts for a long to 5 from 11.6 again to 11.500. So if you're doing 3x leverage, the margin requirement is more than the account. So let's use 7 or something. So you can use 7x leverage, and the loss will be 0.018. 70x leverage, loss will be the same. But remember, okay, 7. This is the maximum amount you could lose. But if you're forgetting about some order or something, and this one is actually filled, and you are getting licked, this is what you are losing on this trade because you used low leverage. So is this actually safer than using 50x leverage? The loss on the trade is the same if you are stopped by a stop loss, but if you're licked, the low leverage is actually less safe. So, and it will also make people maybe not close the trade. Oh, it's underwater, but I'm holding because it will around soon. And then they are holding XRP from $3 to 10 cents. So low leverage can also be a problem for new traders because they are not closing the position, they're just hoping it would turn around. And then they are losing more than if they did a different leverage. So, because they might not trade their plan, they're moving the stop loss or maybe even removing the stop loss. And I have seen people holding positions negative 80% of the account and just hoping it will turn around. And of course, if this trade works out, then they are geniuses because the trade worked out. So yeah, was it a good trade? That one. A bad trade working out is still a bad trade. You should have a stop loss on every trade. There are the only trades I'm not using a stop loss on is fat finger orders in some exchanges, because price will never go there in any normal way. So I don't want a stop loss on that one because that could stop out my fat finger catch. So always use proper risk. If you haven't seen it, I have some tools to calculate risk. The risk calculation is actually the same more or less for every exchange. You should still use 1 to 2, maximum 1 to 2% risk of your account if you're trading stocks, futures, crypto, anything. So that's the way to long-term success. You can look at trading success. What's the best musician? Is it a one-hit wonder band, or is it a big band with 20 successful albums? So the one-hit wonder band might get one big profitable single, but that might just be luck. How do you decide how much leverage you should use? Okay, so I more or less looked at that. So if you want to do let's say you have already calculated the correct position size for the trade. So let's say the correct position size is 3K at 12,500. So this is the trade you want to do, and your stop loss is you will want to set your stop loss at 12.3 or something. Then you can use the calculator, or you can use my tool, but let's just use the calculator. Liquidation price, and let's not use cross this time. So the amount doesn't matter for the liquidation price if you're not using cross. So the what is 12.5? Yeah, the entry price is 12.5. So the important part here is just you need to make sure the leverage is not too high, and not higher than let's say, just use an example for 100x. Let's see. Oh, damn it! I need to use a different pair because this one already has orders in it. There. Okay, it's long. There-ish, yeah. So this doesn't matter, but let's just 3K. My long entry is 12.5. So I want my liquidation price to be below my 12,400 stop loss. So this one will be valid. Let's say do 80x. This one is still valid. It's a little bit close, but 85, it's okay. So 90. Okay, so this leverage is too high because the leverage, with this leverage, my liquidation price will be $7 above my stop loss. So I need to decrease a little bit. Let's just say I do 80. Now it's still a little bit close, to be honest, 70 maybe. So now my leverage is at such a amount that my liquidation price will be below my stop loss, and then it's valid. Anything between 1x and 70x leverage will make sure that my liquidation price is below my stop loss. So then you can use anything, and I will actually say that 70x is much safer than 10x if you are worried about big wicks and stuff. So this is how you calculate the leverage. The only thing you do with the leverage is to impact the liquidation price and the margin required for the trade. Everything else is just about the amount, the entry, and the stop loss. But I would actually recommend doing as high as leverage as possible, as long as the liquidation price is below the stop for longs and above the stop for shorts. And just make sure, if you have resting orders, I need to cancel this one. Yeah, if you have resting orders in the books below, make sure that these orders also can survive the same leverage, because it could stop your existing position, fill your another one, and if this one has too big of a gap from your entry to stop loss, the same leverage could actually end up with a liquidation, because the liquidation will be before the stop. No, I don't have a sweet spot for leverage because I calculate it from in every trade. So let's just go here. I use my tool for it, but usually I just know more or less the correct leverage. Let's say I want to long in the December futures. I can just ignore the leverage for now. I can actually use this tool instead. I don't need the ladder. So I want to do the December still. Ignore the leverage, just set it at 10. I want to long 11,600 again. I want to risk 1% of the account. I can skip the profit targets for now. And my stop loss should be 11,000 for, let's do below 420, so let's do 10. So now I want to long with risking 1% of my account. a long from this level, click on buy. The correct position size is only 540. That's 1% risk. The stop is quite wide, just because that's why the position size is so low. So with this trade, I can just show an example. If I'm doing like 5K contracts and click on buy, this is a recalculate. So save it will not execute. So this one is saying, oh, your risk is 9% of the account. It's too big. It's red, and it's actually correcting my amount to 1.5% risk. I have this set in the config file for the tool that it should recalculate it for 1.5% risk. You could override it here and execute it anyways, but the tool will help you set the risk back to a proper level. The tool here will also show you the maximum leverage you can use. So if I recalculate this, I can just show you 45x leverage, and I can do it was, how much was it? It was 800 something. Let's do 700. Buy. So now the risk is 1.3% of the account, and the liquidation price will be 11,405. That's just below my stop loss. So it's a little bit close, but so my maximum leverage I can use is 45 for this trade. And then the liquidation is just below my stop loss. This is a little bit close, so I will most likely recommend doing something like 40 at least. Then my liquidation is, yeah, this is actually more than enough, 42 maybe. And with my tool now, I can actually just send these orders directly to exchange, and it will be resting in the books. I can also do profit targets on this one. Then it will use this stop limits I showed earlier to actually trigger the profit targets. So after a 1.5% move, it would close 20% of the position, profit target there. After 5% move, it will close 15%. And after 10% move, it will close another 15%. And I can just send this to the exchange. I could probably just execute this one. Let's see, we are fine. Buy. Order successful. And if I go here, now my orders are, was this the new one? Yeah. I sent 700 contracts, and you see, I don't see the green one, it's behind the stop limits. So this one is have a stop market, and a few stop limits, that will be the profit targets triggered. So they will, when filled, they will set a sell here and here and here and so on. I can just close them. There is my buy behind, and close that one. I go that one. So the tool will send the orders to the Bitmex, and when it's possible, it will just send it and forget it. So the tool does not need to monitor this trade at all. That's only for the conditional stuff. Okay. Anything else? I think I should have covered most of the things now. Yeah. Okay. So if you're interested in these calculators to calculate the correct position sizes and so, Bitmex risk, I think. Yeah. So as long as the stop loss is triggering before liquidation price, any leverage will do. So I usually want to do as high leverage as possible. Just know the reason for the high leverage is actually to protect from extreme cases, and it's also to reduce the requirement for margin. So you could, if you have a somewhat small account, you free up more capital to do other trades at the same time. So that's you can use leverage as a tool, just don't abuse it. Use it for what it's meant for. So high leverage isn't automatically bad. It can be, if you know what you're doing, it's actually a good thing. But most people don't, so yeah. Okay, I think that was it for this session. If you I'm not getting a question within the next 10 seconds or so, yeah, I can enable two-factor at one point. Stop complaining. Yeah, 20x leverage is okay as long as your stop loss is at the correct place. But as you see, I could take my existing trade here. I'm the correct pair now, yeah. I can just change my leverage. The important part is that your liquidation price is after the stop loss. Yeah. Okay. I will be in chat for a while, so stick around. And my tools are available for tier 3 subs, or you can buy them in the Discord. They have the tier 3 sub is $25 at the moment. And that will give you access to the tool, and this tool will not stop working, but you will not get updates. So I can look at some alts afterwards, but I will probably do that in a silent session. I think the Wi-Fi wants some attention upstairs, so yeah. So check out my YouTube channel for a lot of videos about how to set up my tools, and also explaining some order types and stuff that is more explained in those videos. And yeah, Bitmex is still one of the greatest exchanges in crypto because of the super fast API and good liquidity. People say it's scary, but that's only because they don't know to trade and use proper risk and stuff. So, and with the tools, you also have an advantage over most other people, because the tools are using the API, the same API as the big boys are using. So, and you have extreme movements. You can sometimes get an overloaded message in Bitmex, but the API will almost never have problems with the overloads. They bypass the front end most people are using. So that's also helping a lot. And the tool will help you do proper risk and calculate everything you need. So it's really helpful. Just check out the YouTube if you are interested, and hit me up in Discord if you want to discuss it, or yeah, Discord there. Yeah. Okay. Have a nice one. Bye.